Hi friends, we are starting a face-to-face offline batch in Bangalore with SS Academy. That is for CA Final Financial Reporting paper number 1. Yeah, we'll be taking exactly 2 months from 1st November to 31st December. We'll complete it. It is starting from 1st November 2022. Yes, and in Jayanagara branch of SS Academy, we have morning batch and evening batch will be at Seshadripuram SS Academy. Right, and if the student is missing because of any reasons, right, they are going to get a backup class. All right, we'll ensure that their things, I mean, they will study and complete. And from the face-to-face batch, you know the benefits out of it. We'll be completing the syllabus in time. You don't need to postpone and you don't need to compromise for your goals. See you in the class. Please share this information with your friends. That will help me and as well. Thank you. Next, for my books, that is an Ind AS made easy, our financial reporting made easy, and fast track summary book. Yes, you can order in ravikantmiriyala.com, or you can contact the given number for the books. Right, for your doubts, clarification, please join the Telegram group Ind AS discussion group RKM. These charts are from my book, that is Quick Revision Fast Track Chart book on financial reporting. Right now, second edition available. Let's look at Ind AS 16, property, plant and equipment. Yeah, there are no great differences between accounting standard 10 and Ind AS 16. Yeah, the scope, when you see, the standard is not applicable for the PPE which is held for sale. That's obviously because there is a separate standard, that is Ind AS 105. Next, it is not applicable for biological assets other than bearer plants. Yeah, when you say biological asset is living animal or living plant, which are obviously dealt by Ind AS 41. Yeah, other than bearer plant, it means for bearer plants it is applicable. Yeah, bearer plants, we'll discuss it little later. Yeah, bearer plant are nothing but a self-constructed property, plant and equipment. Next, this standard is not applicable for exploration and evaluation of assets, that is minerals, oil, correct, right, ores, gases. These non-regenerative assets, it is not applicable. And one more thing, the standard is not applicable for a PPE which is dealt by other standard. If it is dealt by other standards, suppose you have purchased, I mean, in a business combination, you got property, plant and equipment, even though it is initial acquisition, correct, right? If you follow Ind AS 16, then you are supposed to recognize it at its cost, but as per Ind AS 103, it is supposed to be recognized at the fair market value on the date of acquisition. Like this, if there is any specific standard for the PPE, then you have to refer to that specific standard, but not our Ind AS 16. And what is bearer plant? What is bearer plant? When you want to say it's a bearer plant, you are supposed to satisfy three conditions. First, it should be used for producing or supply of agriculture produce. If you take a mango tree, then mango is what agriculture produce. It is held for producing the agriculture produce which bears it, and where the useful life is more than 12 months, and there is a remote likelihood of selling it as an agriculture produce. The tree itself will be sold. That is a rare circumstance. Under that circumstance, that biological asset will be treated as a bearer plant. Okay, and what is PPE? PPE is a tangible asset which is held for producing goods or providing services or rentals or administration purpose, and where the expected life is more than one year, which is 12 months, right? So when it comes to recognition and measurement, when do you recognize it? The recognition conditions are obviously two, my dear. One is the PPE definition, it should be satisfying, that is more than 12 months period basically. And that other two condition, I mean second condition includes the two conditions of asset, that is there should be future economic benefits inflow and cost or value that can be measured reliably. Then yes, you can recognize the asset. Okay, at what amount I should recognize? For that, this information, yeah, when are you is it at the time of initial recognition or subsequent recognition? Initially, when you are recognizing, it should be always at cost. Yeah, it should be always at cost. Initially, when you are recognizing, it should be at cost. Okay, subsequent we will bifurcate into whether it is on the balance sheet date or subsequently we have incurred some additional expenditure on the existing asset or already recognized asset. If you have spent, what to do? We'll have a discussion about this one. Yeah, as I told you initially when you recognize it, you will be recognizing at cost. Yeah, what are the ways of acquisition? You can buy it by paying cash or on credit, or you can do it on self construction or exchange of assets, that is barter system. Okay, if you go by paying cash or credit, yeah, there's a big list. First one, what all the amounts will you be adding it? Purchase price, yes, non-refundable taxes, freight cost, right, and site preparation cost, installation cost, right, what do you say, present value of restoration, decommissioning, correct, rehabilitation cost, that is also obviously borrowing cost also will be taken it up if that PPE is a qualifying asset as per your accounting standard 16 or Ind AS 23. Okay, right, and all other expenses, even trial run expenditure, net, okay, all other expenses directly attributable to bring the PPE to the working condition, all other expenses directly attributable to bring the PPE to the working condition will be taken into, will be added to the cost of PPE, and it will be reduced by if there is any government grant, if there is any discount, right, that is trade discount, price discount, whatever such kind of discount, because that is not the amount what you have lost it, that's why it is going to be reduced. That net amount is going to be capitalized. We'll say PP account debit to cash or payable. That is how we'll do. Yeah, in case of self construction, yes, in case of self construction, what are we supposed to do? In case of self construction, whatever I have discussed under the cash or credit, all that plus any other overheads, but you should not say any other overheads and stop there. Any other overheads which are directly attributable to the construction. What do you mean by directly attributable? Directly attributable means it is incurred because of the PPE, one way to say. The other way to say, if I had not bought the PPE, I would have not incurred, right? Any one way you can say. Generally the second way will be giving a right answer. Yeah, I have incurred because of PP is a straight way of saying. The other way is what? If I had not, reverse way we are trying to tell. If I had not constructed this PPE, I would have not incurred it. Yes, that kind of thing. Any other cost which are directly attributable to the construction, you are supposed to take it. Next, in case of exchange, that is under barter system. Barter system, before we get into accounting, first there are two conditions to satisfy. First one is, right, I mean, if you satisfy conditions, one way of accounting. If you do not satisfy, another way of accounting. What are all the conditions? First one is commercial substance should be there. Commercial substance should exist. What is commercial substance? In simple words, are these items which are getting exchanged? I am giving asset A, I am taking asset B. Okay, these assets should not be similar or same. If assets are similar, then the condition does not satisfy. Second condition, fair market value of the asset given or fair market value of asset taken, that should be measured reliably. Fair market value, correct? Now you must be knowing the given asset fair market value or the fair market value of what you have got, right? If you satisfy both the conditions, yes, we will be following fair market value accounting. What do we follow? Fair market value accounting. That means the asset what we are getting, that is PPE received, should be recognized or will be recognized at fair market value of the asset given or fair market value of the asset taken, whichever is clearly evident. The first priority should be given to fair market value of asset given. Okay, sir, in the question they have given fair market value of asset given and fair market value of asset taken, both are available, sir. Then first priority will go to fair market value of what you gave it. Why? Because we are supposed to measure the initial recognition, we have to supposed to measure the PPE at cost. Cost is what you lost. What you lost is what you gave. What is the fair market value of what I gave, that is the cost really. That's why we will take it. Right, since you are removing one asset from your books and you are taking another asset, Correct. There may be some difference. That difference can be either profit or loss, which will be transferred to P&L. Which will be transferred to P&L. Right. If you do not satisfy the condition, this is book value accounting. I will tell in general. Okay. What is book value accounting? Recognize the new asset. Recognize the new asset at the book value of the old asset. Recognize the new asset at the book value of the old asset. Okay, and in this case, right, in this case both the items are same. When both the items are same, there is no new future economic benefits inflow or outflow. That's why there should not be any concept of gain or loss. There should not be any concept of gain or loss. Okay, right. And if there is any deferred credit period, yeah, deferred credit period, it is a prolonged period. Generally credit period will be 10 to 15 days, from I mean 10 to 6 months max to maximum. If someone says that I will you purchase my asset and give it to me after 2 years, under that circumstance, obviously there is something wrong. The invoice amount must be including the interest element. Correct. That's why you should find out the interest element. Our interest element should be transferred to P&L. It should not be capitalized with the PPE. So PPE should be recognized at what amount, sir? PPE should be recognized at cash price. It should be recognized as cash price. Then what is the interest amount, sir? Interest amount is the total invoice amount what you pay minus the cash price. Invoice amount minus cash price, that is going to be the interest amount. Correct na? Right. So for that you can calculate IRR. In most of the circumstances in the examination they will only give you the rate, so it will be very easy to calculate. Next small concept is component accounting. Component accounting, what? Every significant component of the asset. Means component means one part. Right, one machine you bought it, but within the machine there are more than one parts. Major parts are there. Each part should be accounted separate ledger. Yeah, that may be based on the depreciation method, that may be based on the life of the asset, that may be based on the usage. Correct now, that may be based on the repairs and maintenance with respect to each part. Yeah, that's a professional judgment. It requires a technical support. You should speak to the technical people and they can only identify. Accordingly, we accountants are supposed to, one machine you bought it, but machine part 1, machine part 2, machine part 3, account debit to cash or bank. Okay, that is the very important point. Yeah, when you're replacing any one part after a certain point of time, we need to remember that. We need to remember and we need to ensure that, yeah, we need to ensure that what is the book value of the old part should become zero before you capitalize the cost of new part. Okay, right. Next, if there is any major inspection, yeah, major inspection, generally inspection repairs and maintenance will be charged to P&L. But if there is a major inspection which will be useful for more than 12 months, under that circumstance you please capitalize as a separate component and amortize it over the period that inspection will be useful to you. Right. And one more small topic, machinery spares. Right. So machinery spares, how to account for? Yeah. First question, does machinery spare satisfy the PPE definition? If you say yes, it satisfies, then you follow as per PPE. That means you recognize as a PPE and depreciate over its useful life. Right. No sir, it does not satisfy. Why? Because it has less than 12 months of life. Okay, then you treat it as inventory and charge it to P&L whenever you take it out from the storeroom for the usage. Whenever it is issued for usage, then it should be charged to P&L. Right. Yeah, this is with initial recognition. Now let's come to the subsequent expenditure. Yeah, subsequent expenditure, asset is already constructed. Suppose example, yeah, this is a 3-floored building. We are constructing the 4th floor with the permission of the local municipality. Okay, what should I do with that expenditure, newly spent expenditure? It is not a new asset, it is on the existing asset you are spending money. Shall I capitalize that expenditure or shall I charge it to P&L? Yeah, for that again there are two conditions. Does this new expenditure satisfy PPE definition? Okay, and will there be future economic benefits inflow to you? Yes, if you say yes, future economic benefits will be inflow to me, then yes, why not? You capitalize it. You capitalize it either as a separate component depending upon the situation, or it can be capitalized along with the existing account. No, sir, it does not give any future expenditure, future benefits. Like I painted my existing building, no benefit. Normal servicing of one machine, my vehicle, my car, I took it for servicing. So does it give future economic benefits? It won't give additional economic benefits. It will maintain what it was giving. Okay, a repair or maintenance, name itself is saying maintenance. It maintains what you were earlier getting. It maintains the same level. That's why it should be charged to P&L. Okay, right. And with respect to the second topic, that is on the balance sheet date. On the balance sheet date, each class of PPE, with respect to each class of PPE, you have an option. Okay, right. Each class of PPE, right, now that is based on the nature of the asset. You can say classes, like say land is one class, building is another class, plant and machine one class, furniture and fitting one other class, vehicles another class, computers another class. Like that, so many number of classes of fixed assets will be there. For each class, we can choose one model. There are two models available. One is cost model, another one is revaluation model. Okay, you can choose whichever you want. Yeah, you have chosen now one model. At the end of this next year, at the end of the first year, if you are changing this, then that amounts to change in accounting policy. That amounts to change in accounting policy. Okay, right. So then cost model, if you are following cost model, it is simple. You will be measuring it at cost minus accumulated depreciation minus accumulated impairment loss if there is any. Yeah, reduce it, then what is the net number? A number will be available, will be presented in the balance sheet. Okay, if you have chosen revaluation model, this revaluation model practically you don't find a company who is following. Very less, hardly 99.9999% companies will follow cost model. Our revaluation model will be followed by hardly anybody, right? So what are we supposed to do? You should be measuring the fixed asset of PPE at fair market value. You will be measuring it at fair market value. Yeah, fair market value, right? So after, right, when do you do this depreciate? I mean, fair market value. Remember always, first you should depreciate the asset as usual. Then after depreciation, that book value should be compared with fair market value on the balance sheet date. If there is a significant difference, then formal accounting, formal valuation will be happening. If there is no significant difference, then we will say it's okay, ignore it for the current year, relook at it at the end of the next year. So point to be remembered, first depreciation, next revaluation, after revaluation if there is any impairment loss, that should be tested impairment loss. Sequence, remember, depreciation, revaluation, impairment loss, right? So if there is a significant difference, I told you formal accounting will be taking place, correct? Yeah, and this accounting of revaluation, you are aware of it. Okay, first time you are revaluing, if it is gone upward, it will be transferred to revaluation reserve account. Okay, if it is, yeah, in case of Ind AS, it will be routed through OCI. Yes, if it is a downward revaluation, that is on conservatism, it will be charged to P&L. Yep. And next, it is a subsequent. Yeah, subsequent revaluation is based on first time how you did it. First time, sir, it was upward revaluation. Super. Now next time what happens, sir? Next time it is further upward revaluation. Then again transferred to revaluation reserve. Sir, first time upward revaluation, but next year it is a downward revaluation. Okay, when it is downward revaluation, to the extent you have revaluation reserve, you debit revaluation reserve account. Okay, the balance amount should be debited to the profit and loss. Okay, next option. Sir, first time we did the downward revaluation. Okay, right. Second year it is further downward. Okay, it is further downward. Then again charge it to P&L. Next situation. First time it is downward situation, and second year it went up, sir. Okay, it went up. Then remember, to the extent earlier you charged it to P&L, To the extent you charged it to P&L in the first year or in the previous years, that should be credited to P&L now. That should be credited to P&L to the extent earlier you debited to P&L will be credited now because it is started growing. Over and above that amount, that will be transferred to revaluation reserve account. Over and above that will be charged to revaluation reserve account. Okay, right. Next concept is disposal. Disposal of PPE. Yeah, whenever you dispose of the PPE, right, what are you supposed to do? You are supposed to calculate the gain or loss. Yeah, first of all, when is the disposal or de-recognition takes place? When the asset is sold for, or the company entered into a finance lease. Yeah, when you say finance lease, that is also risk and rewards of it is transferred to other party. Correct? No, that is the right. Under that circumstance, or there are no future economic benefits from the asset. Asset is physically there, sir. No benefits to me, sir. Then also remove it from the books of account, my dear. Under that circumstance, you are supposed to calculate gain or loss from the de-recognition. How do you calculate? Very simple. Sale proceeds minus book value or carrying amount. Both are one and the same, right? That profit or loss always should be transferred to P&L. Always should be transferred to P&L. Okay, sir. I was following revaluation model. Okay, right. There is a revaluation reserve sitting in the balance sheet. Excellent. On sale, I got loss. On sale, I got loss. So can I offset? Never. Any profit or loss on sale should always directly go to P&L. So then what should I do with the revaluation reserve sitting in the balance sheet with respect to that asset? That should be transferred to retained earnings. Retained earnings directly. Correct. Now from revaluation reserve account to reserves and surplus may one more account, retained earnings. Yeah, people may write it as a P&L account or people may write it as a surplus account, but end of the day that should be transferred. Okay, my dear. Then we are reaching to the last topic, that is depreciation. What is depreciation? Depreciation is a systematic allocation of depreciable amount over the useful life of the asset. I repeat, depreciation is a systematic allocation of depreciable amount over its useful life. Good. What is systematic allocation? That is nothing but method of depreciation. What is depreciable amount? Depreciable amount is cost or revalued amount minus residual value. Cost or revalued amount minus residual value. Useful life, yes, useful life can be number of years of it is going to be used by the party or number of units that can be produced during the usage. Yeah, remember all the three things. Which are those things? There is a method of depreciation, residual value, and the life. These three things are accounting estimations. That's why standard says every year management is supposed to review it. Every year management should review it. If there is any significant change in it, yeah, you thought something residual value after 2 years or 3 years it went up down, right? Compared to what you estimated in the past. That extent, I mean, you have to follow prospective accounting. What are you supposed to follow? Prospective accounting. Prospective accounting means simple, follow from now onwards without considering the past. Yeah, in another way, remaining WDV, book value or carrying amount, all the words are same. Remaining book value should be depreciated over the remaining life. Should be depreciated over the remaining life considering today information. Considering today information. Okay, right. Next, Schedule 2 of the Companies Act gives you the lives of the assets. Those lives, whatever the numbers they have given, those are indicative information. That is not mandatory for the company to follow. Okay, point. Next point. Suppose if the company takes it as an accounting policy, sir, about 10,000 rupees any asset, I mean up to 10,000 rupees of any fixed PPE, we would like to charge it off 100% in the first year itself. They can do so as an accounting policy considering the materiality concept. Okay, right. Next, depreciation, whenever I say, right, which day it is ready to use, from that day depreciation will start. Okay, which day ready to use, not put to use, ready to use, then it will be starting depreciation. Cool. The next point, what we say, depreciate till the time this is disposed of, derecognition, till the time of derecognition, first you have to calculate the depreciation. After calculation of depreciation, the book value will come. That book value should be used for calculation of your profit or loss. That book value should be considered for your profit or loss. Okay, right. Next, revaluation reserve. Right. With respect to depreciation, not revaluation, with respect to depreciation, our depreciation expenditure should always be charged to P&L. Should always be charged to P&L. You should not adjust it with capital reserve or revaluation reserve at any cost. But you have an optional accounting, right? The excess depreciation which is taking place every year, because of the revaluation, that can be transferred from revaluation reserve to retained earnings every year. See, normally depreciation 100 rupees, sir. Okay, because of the revaluation, now it is becoming 139 rupees. Okay, so how much is excess? 39. So every year, assume next 3 years, 39 extra is getting charged. Charge it. First entry, depreciation expense account debit to fixed asset 139. Yeah, if the company wish to follow this, then revaluation reserve account debit to retained earnings 39. This is an optional way which is obviously discussed in the classroom. Next, if there is an integral part of, if it is an integral part of asset, what did I say? If it is an integral part of asset, right? See, there is a big machine, there is a small machine, both are working together. Yeah, this life is 10 years, this life is 12 years. Now, how do you depreciate the small one? First, we should ask, is the small one is integral? Integral in the sense, this will work along with this, and once the big machine life is over, this also has to die. Under that circumstance, even though its individual life is equal to 12 years, but you have to depreciate it over the 10 years time only. You have to depreciate it over 10 years because this has 12 years, this has 10 years, but after 10 years of life this will be done, then this cannot work with any other machine. That's the reason this also has to be depreciated in 10 years. And no, if you say, so this is non-integral, sir. Non-integral in the sense what? Even the first machine dies, no problem, it will work with one more machine. So then this will be useful for my full 12 years. Then I should depreciate it over 12 years of time, right? I hope that's all, my dear. This is about your accounting standard 10 or Ind AS 16. Yeah, if you feel this will be useful to your friends, please share, and at the same time, for my encouragement, please comment whether this is useful to you, not useful or correct. If you want further about other accounting standards or Ind AS, yes, subscribe to my channel Ravi Kanth Miriyala. There you will find list of other standards, this kind of quick revision, and wish you all the very best. Thank you.